There was big news for Qualcomm and Intel stock investors as rumors surfaced that Qualcomm may be interested in buying parts of Intel's business. This comes amid speculation that Intel was looking to sell off parts of its business to reduce complexity, raise capital for the expansion of the foundry business, and assuage investor concerns. From Qualcomm's perspective, it makes sense. The company's been working to diversify its business because it's heavily concentrated in the mobile phone segment. Qualcomm's recent designs for PCs are gaining traction, and the PC industry is in the early stages of a massive replacement cycle. Let's take a closer look at this potential deal and what it could mean for both Qualcomm and Intel stock investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So here's the article on Yahoo Finance, which said that Qualcomm is reportedly considering buying parts of Intel. A Reuters story said the company executives are especially interested in Intel's PC chip design business. It's the latest report to detail possible deal activity for Intel as the chip giant looks to revive interest in its flagging shares. And that's an understatement. Intel stock price is down 62% year to date, one of the worst performing semiconductor stocks in the market. Qualcomm, meanwhile, has fared better. The stock is up 9.42%. It was actually up over 40% earlier in the year after coming down in recent months. Of course, Qualcomm lost a license to a strategic buyer in China, which caused investors a little bit of disappointment and loss of enthusiasm for Qualcomm stock. You can say just a little bit. The stock is down over 30%. Off its high when it was up over 40%. So for Qualcomm, it makes sense that it's interested in the PC design business from Intel, as the company recently launched its Snapdragon X series, which is ushering in a new era for PCs. The company's Snapdragon X series is exclusively powered by Microsoft Copilot Plus PCs, and the company has several partners, manufacturing partners, that are helping build these PCs, including Acer, Dell, HP, Lenovo, Samsung, and Microsoft itself. So Qualcomm is making a big bet on the PC business. It's not dipping its toe in. It's going in both feet here with the launch of the Snapdragon series here. Already, it's gaining traction. There were some headwinds as there were reports that Qualcomm-based Microsoft computers were not able to play best-in-class games. The graphics, there was some lag, there were some bugs, but they're working on fixing that. Qualcomm's response was that their devices, their software, their designs are not meant for gaming. They're meant more so for productivity, although they are working to help improve this situation. Meanwhile, from Intel's perspective, it's all about cash. The company is short on this metric. The company generated $1 billion in cash flow from operations in the first 6 months of this year. It was roughly the same in the first 6 months last year. But look at how much the company is spending on investing activities. Additions to property, plant, and equipment totaled over $10 billion in the first 6 months of last year and in the first 6 months of this year. $13.3 billion in 6 months in the first 6 months last year, $11.6 billion in the first 6 months this year, combined for over 25 or roughly $25 billion in additions to property, plant, and equipment. Again, this is Intel capitalizing on government incentives to build out and expand its foundry business. Now, the government is not giving Intel all of the money to build these new facilities, but they are giving Intel some of the money and also giving Intel low-cost loans. So Intel is trying to capitalize on this opportunity and use it as an opportunity to catch up on technology. It has fallen far behind TSMC, Samsung, and others in the chip fabrication business, and it's trying to make inroads there. Now, it's interesting that it's which parts of its business it might sell. I'm not sure if Intel will be interested in selling parts of its chip design business. Intel has been fiercely protective of its market share in personal computers. Remember back around 2005, 2006, when it was interested in making a deal with Apple for the iPhone so that it can have its designs inside Apple's processors, but ultimately it chose not to because it was concerned how it would impact its personal computer business, how it would impact profit margins, because the margins in the PC business were so strong. Well, do you think Intel would be interested in giving up that part of the business now? I don't know. It seems unlikely. But it does seem likely that Intel would sell parts of its business, although it's uncertain which parts of the business it would sell. Historically, Taiwan Semiconductor has found great success because it doesn't compete with its customers. The chip design companies that outsource the manufacturing to Taiwan Semiconductor do not need to be afraid of competition from Taiwan Semiconductor because it doesn't make its own branded chips. It only makes designs from other companies like Apple, like AMD, like NVIDIA, etc., right? So it just manufactures. It doesn't have their own name brand chips. Intel, however, does have its own name brand chips, and now it's attempting to have a fabrication facility where other chip design companies can hire it to outsource manufacturing. So it remains to be seen how successful Intel will be in attracting that business, given the potential for conflict of interest. I'm not saying there is going to be conflict of interest, but there is potential for conflict of interest. And so it's a big question mark there. If Intel was to sell off its own name branded chip segment, which would be a huge sale, that would reduce some of that complexity. If it was to become only a fabrication business and not a branded chip business, that could work. Taiwan Semiconductor certainly has demonstrated the playbook in how successful it's been in just being a fabrication business. So that could work, that has potential for working. Still a lot of uncertainty here. Intel looks like it took too much of a step forward in the expansion of this business, of the fabrication business. $25 billion is a lot of capital investment in a short amount of time when your business is not generating anywhere near that kind of cash flow from operations. So this cash is draining, and you can understand why Intel had to pause paying a dividend, because they were concerned about their cash balances. Now, Intel and Qualcomm are trading at attractive valuations. Intel at a forward PE of 15.75, Qualcomm at a forward PE of 14. And I have each of these stocks rated as a buy. I would say Intel is riskier with greater upside, and while Qualcomm is less riskier with less upside. So for investors, that's my opinion on these two stocks. I have a lot more videos on these two if you want to do further due diligence. But big news coming out here for Qualcomm and Intel stock investors. I will be sure to keep a pulse on this situation and keep you informed if there's any new developments. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.